So Tesla stock is still hitting new all-time highs, and in this video I want to go ahead and touch on what we're currently seeing in regards to Tesla stock and where do I see Tesla stock going forward. Now, just 6 days ago I made a video highlighting the underlying market dynamics like a gamma squeeze, which was going to help Tesla stock continue pushing upwards, and we have seen Tesla stock continue to push upwards. But then just 2 days ago I made an update saying, yeah, Tesla stock is hitting new all-time highs, but I believe it's going to continue pushing up, and we ended up seeing another big green, or I guess in my case, a white hollow candlestick, right? Because I changed the colors from green and red to white and black, right? But nonetheless, another big bullish candlestick pushing upwards, which is now leading us to sit at $436.30 per share, which is quite a big run since the election results. In fact, we ended up seeing this big move up after the election results, which was around November 5th, and that puts us at slightly a little over kind of 78% since that election result that we got on November 5th. And year to date, Tesla stock is sitting at 75.60%. So pretty much the result of this last few these last few weeks has contributed to what we ended up seeing for the entire result for the year to date for Tesla, because pretty much the beginning of the year, Tesla was flat, right? It was kind of lagging a lot of its constituents in the Magnificent Seven, and then boom, we just ended up having another big move. And so I want to go ahead and touch on what do I see Tesla stock doing moving forward. Now, again, I don't have a crystal ball, of course. This is just kind of what I believe is likely to take place based on just a mixture of fundamental analysis, technical analysis, and then also the macroeconomic environment. Now, in my previous videos, I've highlighted how, yes, Tesla stock is pushing upwards, and it is a bit frothy from a fundamental perspective. Now, I did have some people in the comment section kind of debate that, and I want to go ahead and touch on a couple of reasons why I believe it's a bit overextended from a fundamental perspective, but that doesn't necessarily mean the run is over. And that's what I pretty much said in my last few videos, that fundamentally it's overextended, but that doesn't mean it can't keep going up higher. And I still believe there's a little bit more gas left in the tank. I'll go ahead and talk about where I believe we may end up seeing kind of a pause for Tesla before we may start kind of reversing downwards. But I'll talk about that later in the video, so make sure to watch this video in its entirety. Also, subscribe to the channel if you haven't done so already. Now, Tesla's valuation has kind of sparked a big debate, especially how when we look at it through the lens of its price to earnings, which is the PE ratio, which, let's actually break this down, right? The PE ratio is a way of measuring how much market participants are willing to pay for every dollar a company earns, right? And let's actually, I have another tab here to kind of draw this, right? So a good way to think about this is actually like a money printer, right? So we'll just draw this little box. And then, this is the money coming out, right? I'm not an artist, but this is the printer. And then let's actually draw an arrow, right? This is the printer. And then this is the money, right, coming out of the printer. So we'll do M. And so, when we're thinking of it as a money printer, if you buy a printer for, let's say the printer is $100, right? And it prints $5, right? $5, and these are dollars, right? $5 each year. It would take you 20 years, right, when you kind of figure out how long it would take to actually make the $100 investment take place, right? So it would take 20 years to get your money back, right? So that would be 20, and that's essentially a PE ratio of 20. And so for most large companies, especially large ones with $1 trillion valuation, their PE ratio tends to be around 20 to 25, meaning market participants are willing to wait around 20 to 25 years to break even based on its current earnings. Now, here's where Tesla stands, right? And let's kind of just look at the price action here. Now, Tesla, where it stands is PE ratio is far higher than the average for, these trillion-dollar companies like Apple or Microsoft. And market participants are essentially paying a premium for Tesla, believing that its future earnings will grow exponentially to justify the high valuations. Okay, well, that could be true. But how much does Tesla actually need to earn to make its valuation make sense. Now, we could actually work backwards to find that out, right? Because Tesla's current market valuation is over $1 trillion. And if we use a PE ratio for a $1 trillion company, let's just say 20, it means that Tesla would need to earn about 50 billion in profits each year. And that's the earnings level you expect for a company in Tesla's league at a typical PE ratio. But here's the catch. Tesla's car business, which I've made tons of videos in the past, it's pretty much its primary driver for revenue today, and that's expected to only earn about 10 billion a year in the coming years, right? And so that kind of leaves, maybe I could, actually no, we'll be done with the drawing. But that leaves like this massive gap, this 40 billion gap that Tesla would need to justify its valuation. And so this is where the speculative nature of Tesla comes into play, because many market participants, they're betting that the future technologies like robo-taxi will step up and make the difference. Now, to put this in perspective, the Tesla robo-taxi fleet would need to generate $40 billion in annual profits to meet the 50 billion total earnings threshold. And so maybe we will draw, right? Can I erase this? There we go. Actually, it's too much work. We'll maybe, yeah, you know what? Let's draw. So I'm in a drawing mood today, right? So to kind of think about that, right? When you think about $50 billion in its total threshold, for context, $40 billion is already, it's a big number, right? That's a staggering number, larger than what most of today's largest automakers earn from their entire business, right? So it's essentially betting that Tesla would invent and dominate a new industry that doesn't yet exist at scale. And that's not, I'm not denying that, right? That this is not a video to say that's not possible, but I'm trying to put things into perspective, right? So let's take a step further, right? Elon Musk in the past has said that he believes Tesla could one day be worth more than Apple and Saudi Arabia combined. And those two companies are worth about 5.6 something trillion around there. And so if Tesla was to achieve that kind of valuation and trade at a similar PE ratio of 25, it would mean that Tesla needs to earn about 225 billion in annual profits. And so to put that into context, the largest auto maker today, Toyota, earns about 20 billion a year, and Tesla would need to earn more than 10 times as more profitable than Toyota, assuming that it trades at a relative normal PE ratio. And so that's kind of betting that I'm drawing this because I don't know why it looks like that. If you guys ever seen FSD, this is kind of like how it looks in the car, right? It's your car, and then you have the little roadmap, and I'm sure most people are familiar with fully self-driving, right? FSD. And so there's this big bet that FSD is going to go ahead and hold its weight. Now, again, that's up for debate. I'm not saying that it won't or that it will, right? I'm just saying that right now it's having this huge expectation, and that's assuming that Tesla trades at a normal relative PE ratio. And this is why the PE ratio for Tesla is such a hot topic, because the PE ratio doesn't just measure how much Tesla's earning now, it reflects how much the market participants believe Tesla will earn in the future. And so there's this huge belief that this is going to be successful, especially after the election, right? Because of the topics of deregulation with the Trump administration. And so that's why the PE ratio has grown, or pretty much the valuation of Tesla has grown tremendously because of the idea of FSD with the idea of deregulation. And I hope I'm keeping everyone on topic here, but what we have to understand is that there's this idea that, hey, look, let's go ahead and put money in Tesla now because it's going to earn a significant amount in the future. Now, the problem is that the future projections, like $40 billion from robo-taxis or $225 billion in annual profits, they're not guaranteed, right? That's something we have to understand. Whatever you're doing a discounted cash flow model, it's based off assumptions, right? The future is not guaranteed, right? Unless you have some type of time traveling machine and then you saw the future. And then even then, if you go back in the past, and you may end up having the little butterfly effect, right? And then you ruin everything. You make sure this doesn't happen, I guess. I don't know. But if those expectations are met, that means Tesla stock could come crashing back to earth. And so the P ratio essentially tells a story of hope and speculation. But for those who rely on kind of like a fundamental analysis, it raises an important question. How much is too much to really pay for the dream of FSD? right? And so what did I talk about in my previous videos? Well, I said, okay, we know that Tesla stock, is kind of extended from a fundamental perspective, but when you synthesize kind of a technical trend over it, right, we have to kind of understand that the actual price action could deviate from fundamentals. We see that all the time take place. So what do we like to look at? Well, the technicals. And so when we look at the ADX, which is the average directional index, right? We show, and this essentially just tells you how strong the trend is. It doesn't tell you if the trend is strong or weak. But we could tell, obviously, by the price action and the white hollow candlesticks that the trend is upwards. And so it has a long trend. And there's this saying in technical analysis that the trend is your friend until it bends. So you don't want to fight the trend at this very moment, right? It's still going upwards. It'd be kind of a bit imbecilic to go ahead and say, I'm going to short right here. You don't have the confirmation just yet. And so we still see that there's this healthy trend. And I mentioned how the RSI has been, and I've been saying this for a while, it's climbing up there, but it still hasn't hit overbought territory. Typically, the relative strength index, which is kind of this momentum indicator, tells you something's overbought once it hits 70, right? We're currently sitting at 60, like 68 something. So kind of up there, right? From looking at the RSI. Now, one thing I mentioned in my previous video, I talked about something called which is essentially the psychology around numbers. And I mentioned how I believe that Tesla can, in fact, go up to 450. Now, again, I don't have a crystal ball. But why did I choose 450? Where there's this idea with round numbers, right? There's this psychology of round numbers and trading especially, which is deeply rooted in human behavior and cognitive bias, making them significant decisions or making them significant points for decisions rather in the market. And so to kind of see where 450, I know it sounds far from where we are, right? 450 from 436, that's really only about 3%. Give or take. And considering that Tesla recently with this big candle, right? Let's actually look at the close of this day, and then here I did like almost close to 5%. So 3% isn't out of the question. So 450 isn't something that's really far away from Tesla. And so when you kind of think of round numbers, and round numbers are like 10, 50, 100, right? It's not just like 430, right? It usually moves in increments of like 50s and hundreds. They're appealing. And they're just easier to remember, and they serve as this kind of neutral anchor for market participants setting up their buys and sell signals. And this behavior, it's kind of reinforced by a collective of actions from traders, creating essentially what is like a self-fulfilling prophecy, right? You have multiple traders and or market participants, they see 450, and that may trigger something psychologically where they're like, okay, now it's the time to kind of trim on the position, right? And so that's just kind of what I mentioned in the previous videos. Now, what we also tend to see in the markets, right? Let's look at the exponential moving averages, is that over time you see the price action tend to have this reversion to the mean, to the averages, and we are far away from the averages. And so that also kind of leads to believe that, okay, we're likely to start reverting soon. Now, again, I don't have a crystal ball, and you should only trade or invest in whatever you see value in. This is not to tell you to buy. This is not to tell you to sell. I'll never tell you to buy or sell anything. You do whatever you see value in. Now, me personally, I do have exposure to Tesla in my long-term portfolio. I haven't bought more during this run up. And I know some people say, oh, why are you not buying more? Because it's going up. Look, again, everyone has their own kind of investing philosophy or principles, and I don't want to have too much exposure in my portfolio for Tesla, right? I don't want to just be all in Tesla at the end of the day. I know there's some people you'll see on YouTube who they'll say, I sold my house, I sold everything, all into Tesla, right? I'm not doing that, right? Look, that all power to you if you want to go 100% in Tesla, not me, right? So have I benefited from this major move from Tesla? Absolutely, but I haven't bought more from Tesla, and I'm looking to actually trim some shares if we hit 450 and we start to see, things kind of fall down. Not just because we hit 450. I'm not going to say, oh, we hit 450, time to sell, because, again, that'd be imbecilic. It's just, hey, we hit a number, time to sell. No, I have to see if we end up seeing a bit of selling pressure or maybe consolidation around 450. And so that's kind of the area that I'm watching for Tesla, 450. But that doesn't mean that Tesla can't continue going up. And actually, want to show a little chart over here. You know, the P ratio, price to earnings, is at 109. Back then we were at extreme level. Look at this, right? You guys remember, you know, during 2020 and 2021. I mean, it's not too far from now, right? Especially if you've been participating in the markets for quite some time. You guys are familiar with this crazy run up that we had. And at that point, I did trim some shares. I wish I actually trimmed more shares in Tesla, but I trimmed some shares before having that bear market in 2022. And, you know, I did add some. I believe it was in 2023. I made some videos talking about adding more shares of Tesla. 2024 has been kind of a brutal year all the way up until now. And I'm looking to possibly just trim a few shares and kind of rotate out of Tesla into some. You know, I talked about, you know, the Push and Profit private group, how I've been you know, kind of riding the wave for Palantir. That's where I rotated some other shares from other companies to Palantir. But again, I don't like to have too much concentration in any company, Tesla, Palantir, anything, right? I know some people don't like to balance their portfolios or rebalance. Some people have the philosophy of just buy and hold forever. It doesn't matter if you have a huge concentration. I have a different philosophy. Again, to each your own. You know, if I have too much concentration in one area from a risk perspective, I'm like, okay, well, you can't have too much in one area. Let's look for alpha somewhere else. But again, to each your own. But just wanted to provide an update for Tesla, right? Because we are at you know, these new all-time highs, so we're still in this price discovery level. But I believe that you know, we may end up seeing things kind of start to cool off, especially as the technicals are suggesting things are moving to the overbought areas. But with that said, hopefully you guys got some value in today's video. And with that said, make sure to check out this next video right over here, or even check out this video here, and I'll see you guys on those